Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
What do taxes, inflation, and fees have to do with retirement? Everything. Hey, I'm Rick Durkee. I'm your host of Navigating Retirement, and today we're going to talk about taxes and fees and that they can wipe out a significant portion of your savings and compound the current effects of inflation. The good news is that if you pay attention to these three variables, you can avoid, at least in part, the ravages of inflation and reduce the impact of taxes and fees on your retirement portfolio. Retirement planning is not the easiest thing to do. Whether you're planning for your own retirement or helping a family member plan for theirs, there are a lot of things to consider. In this episode of Navigating Retirement, I'll discuss with you how you can effectively manage these three major influences in your retirement strategy so that they don't become a strain on your golden years. This retirement planning video is meant to be shared with anyone that you might find that they may find it helpful. If you think that your retirement-minded friends or family might be interested in watching this video, feel free to share it with them. Don't forget to copy or write down the link to this video and send it to them. There's several links below in the show notes section with valuable information you can use for your retirement planning journey. So, are you ready to learn a little bit more about how to get started with your estate plan and get it in order? Let's get started. First of all, taxes. How are you taxed in retirement? Well, we're taught that we're going to be paying a little bit less taxes in retirement because we won't have as much earned income or taxable income in retirement. It's important to know that taxes can be planned proactively for how you take your income in retirement and how you siphon in taxable dollars with tax favored dollars or perhaps never tax dollars. But how you do that in your retirement could save you thousands of dollars per year in taxes that could add up to significant dollars over your retirement lifespan. What's the average rate for retirees? Typically, our clients here at the Coastal Financial Planning Group, we do planning and we see their tax rates on the federal basis somewhere in between, say, 15 and as high as 30%, but typically falling in that range of maybe 15 to 20%. A question that comes up often is how can you avoid paying taxes on your retirement income? A Roth conversion strategy is a very good and useful tool to be able to do that. We do that with a majority of our clients and figure out how we can turn those fully taxable dollars in your IRAs to never tax dollars in a Roth IRA. Now, one other question that comes up with taxes in retirement is what age is a 401k withdrawal tax-free? Well, that's almost a trick question because it's never tax-free. The 401k withdrawal or IRA, if you roll it over into a IRA from your 401k, is forever taxed as an IRA or a 401k withdrawal. It can be penalty tax-free if you wait till 59 and a half to withdraw from your 401k. Inflation, another factor that we need to think about here in our three topics that we want to touch on here today. Inflation, something that we're all aware of right now. If you went and got a sheet of plywood 6-8 months ago, it sure was a lot cheaper than it is today. Or even recently before that, it was significantly higher, about a month or two ago. How does inflation affect us in retirement? It's a silent tax, folks. If inflation costs us more because we're buying goods and services in retirement, it costs us more to buy those goods and services, then it relates to our taxes because we'll pay more to get those goods and services, and we'll be taxed more because we'll have to take more withdrawals out of our IRAs or wherever we need to pay for those goods and services. So inflation can be a silent tax in a way, and certainly you need to adjust for inflation in retirement. Pensions, they come into play here as an income stream in retirement. How they fight inflation is they have what's called cost of living adjustments. Your inflation protection in your income streams is going to be cost of living adjustments that come from your Social Security payments. They get cost of living adjustments. How do pensions keep up with inflation? Well, they have cost of living adjustments. Your Social Security is like a pension payment. It's like an annuity payment. It has a cost of living adjustment in it also. And if you set up income planning for your retirement, you should definitely factor in inflation and make sure that you got income increases to keep up with inflation. So your sources of income should have some form of inflation protection built into them with cost of living adjustments or adjustments in your income plan for inflation. Fees. Fees are certainly a misnomer, unfortunately, in the financial services industry. They are explained to you, and they should be very transparent. Here at the Coastal Financial Planning Group, we feel it's so important that we discuss that in our initial first step of the 3-step review that you have an opportunity to sign up for during this show, or you can come in and we can review taxes, inflation, and fees with you. But we help you discover what our fees will be in a fully transparent basis before you make any decisions as to whether or not you want to work with us here at the Coastal Financial Planning Group. But I suggest that anyone that you discuss any type of financial planning or financial management, you should have a full disclosure of those fees before you decide if you want to work with them. And that means tearing down individual financial products that are being recommended and looking at them, pulling the sheets back, looking under the covers, seeing what the internal fees are on those particular investments or fees for financial planning advice, financial planning tools that the financial planning firm might use. Make sure that you quantify what those total fees are before you make any financial decisions. Fees that can be associated with investment choices in your retirement plan can vary. It's important that you reevaluate those fees on a regular basis also, because fees can change as your account values go up. So you want it to be, your fees want to be proportionate with what type of advice you're getting, what value-added services that you're getting, and of course, what type of investment returns you're getting on your investments that you're using. Some people ask, are there fees in a 401k? Oftentimes there are. Fees can be a little bit higher in a 401k, and you can be limited as to the investment choices that you have. Sometimes people ask if fees in a IRA are higher than in a 401k or vice versa. Typically, fees in a 401k can be higher than the IRA, but it really depends on where your financial advisor places your investments in your IRA as to what fees you'll be paying. Why are 401k fees so high is another question that comes up oftentimes. It's often because the investment management company that's offering the investments inside of that 401k has some high fees associated with their investment choices. So certainly things we should evaluate when we're looking at our retirement planning. We discussed 3 today: taxes, inflation, and also fees. You want to make the most of your retirement savings, don't you? Dealing with these 3 issues of taxes, fees, and inflation is a confusing process that can lead to mistakes, sometimes surprises, or just plain confusion if we don't get the right information or we don't know what questions to ask to get that proper information to make your decision. We always know that if we have the proper information and our decisions are not based on misinformation, incomplete facts, or perhaps some myths or confusion, that we don't make the best decisions that are in our best interests. So the Coastal Financial Planning Group can help you build a financial path to retirement that incorporates your proper decisions on fees, taxes, and inflation so that there are no surprises. Find out what the difference a few simple steps can make in the value of your retirement savings down the road. Our 3-step review has those 3 simple steps that we can go over with you. Call us 843-735-5065. I look forward to meeting with you again on a future episode of Navigating Retirement. Thank you as always for watching Navigating Retirement and for sharing these video podcasts with other people that find them useful for their retirement planning. Retirement is a big step in life, one that may not be quite as easy to do, one that shouldn't be taken lightly. It's never too early, never too late to start planning for your retirement. Thank you again for watching Navigating Retirement.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Third-party rankings and recognition from rating services and publications do not guarantee future investment success. Working with a highly rated advisor also does not ensure that a client or prospect will experience a higher level of performance. These ratings should not be viewed as an endorsement of the advisor by any client and do not represent any specific client's evaluation. Generally, ratings, rankings, and recognition are based on information provided by the advisor. Please contact the advisor for more information regarding how these rankings and ratings were formulated.